คุณผู้ชมคะถึงแม้ว่าเศรษฐกิจโลกในปีนี้นะคะจะมีการฟื้นตัวอย่างน่าสนใจแต่ก็มีความเสี่ยงและก็มีความผันผวนที่เกิดขึ้นนะคะทั้งจากสหรัฐอเมริกาและจากฝั่งยุโรปอย่างไรก็ตามค่ะ CLSA มีมุมมองนะคะว่าเศรษฐกิจจีนและเศรษฐกิจอินเดียถือว่ามีการเติบโตที่ค่อนข้างจะน่าพอใจรวมไปถึงนะคะยังมีโอกาสในการลงทุนซึ่งจะมีรายละเอียดอย่างไรบ้างนั้นเดี๋ยวเราไปตามกันนะคะกับ CLSA ในช่วงของ World Update ได้เลยค่ะWhat is your view on the global equity market for this year?
Well, I'm really looking at Asia emerging markets. That's my prime focus. And on that view, I'm hoping that Asia emerging markets outperform world stock markets this year. My big overweights in Asia right now, since the start of the year, are India and China. So I'm more overweight China than I've been for many years, and I remain structurally overweight India.
What is the reason?
Well, the reason on India is because it's the best domestic demand story in Asia and has been for a long time, although we had a setback to that market with the demonetization move in the fourth quarter, but prices have now rebounded. And on China, China equities have been disappointing for many years, but I think a positive signal in China in the last few months is that PPI inflation has turned positive for the first time since early 2012. There's a very close correlation between PPI and nominal GDP. We see accelerating nominal GDP growth, and I'm hoping that PPI in China stays positive, and this is just not a short-term trend. I'm also taking the view that China can control capital outflow because there's been a lot of concerns about the Chinese currency. Capital outflow, but my base case is the Chinese government's in control of the capital account. So I'm overweight MSCI China index stocks, which are actually so-called H shares quoted in Hong Kong, and they have been trading in recent years at discounts to the Shanghai stocks. But we see growing evidence of what they call southbound flows on the Shanghai Connect scheme, and this where mainland investors are buying stocks quoted in Hong Kong. And I think this is a further support to China stocks in Hong Kong because I'm expecting these southbound flows to continue. And foreign investors probably began this year underweight China. Well, in terms of the areas to own, I mean, it's the obvious areas of banks, insurance stocks, property stocks, but I also like some of these companies in the old sectors which are being restructured. So one very positive policy that began to become visible in China last year was so-called supply-side reform, where they show evidence China are finally reducing production capacity in sectors like steel and coal, which had big excess supply. So I'm hoping that the best companies in these sectors will benefit from that consolidation. So we're expecting this supply side reform in China to continue. We're also expecting a big ongoing strong infrastructure investment in China, also expecting a further expansion of the OBOR scheme, One Belt, One Road, which would benefit Chinese construction companies.
How about in India market?
In India market, I've been long-term positive, so that's not a new. My story in China has changed in the last 6 months. India, I just remain long-term positive on the domestic demand story, and I've really been very positive in India when it became clear that Mr. Modi was about to win, it was going to win the election in a landslide, because I think the policies Modi's pursuing will be long-term very positive. Well, the suitable strategy is either to buy stocks geared to both individually to both markets, but all Asian equity funds will have are likely to have big stakes in both China and India. But we began the year with many people believing that emerging markets would underperform because there's a lot of obvious risks. People were concerned about protectionist actions from Trump administration. People are concerned about Fed tightening. They're concerned about dollar strength. These are all traditional negatives for emerging markets. But I think what's interesting is when we had a big rally in the US dollar when Donald Trump was elected, but the commodity prices still went up. So that was a change in the normal relationship. Normally when you get a strong dollar, commodity prices sell off. And I think one key reason for the commodity prices behaving so well is the fact that the Chinese are finally seem to be addressing this excess capacity. So the Chinese are cutting steel production. That's good news for steel companies globally.
Yes.
Same if they're doing it in coal or aluminium, all these areas. If they cut the production capacity, reduce the excess capacity, that's a big support for commodities globally. In terms of other world markets, obviously US equity markets began the year very well,
Yes.
anticipating tax cuts, but to me the US equity valuations are a bit scary. So personally I wouldn't be investing there, though there's obviously very good momentum. European equities are cheap. If these elections do not result in populists getting voted in, you will get a big rally in Europe. But obviously you have the political risk. And Japanese market, I believe, is cheap.
And is it interesting?
It's interesting, but it's cheap, and yeah, I would be overweight Japanese equities.
What are the factors that we should watch carefully for this year?
Now, the key factors right now globally, which remains unclear, is exactly what policies are going to be announced by the Trump administration and the US Congress in terms of tax reform and whether the potential protectionist actions, whether they decide to proceed with this so-called border adjustment tax. So right now there's a lot of lobbying going on in Washington. The border adjustment tax is very positive for American exporters, very negative for American importers, and there's a lobbying war going on, and we're just waiting to hear what policies will emerge. But right now it's very unclear.